Good afternoon, traders. This is Kevin Craney with RJO Futures with your afternoon financial market update. Equities ending higher, S&P 500 trading at a 5-year high, closing there today. So really that move coming off of better economic data than it was anticipating. But we're right in the heart of fourth quarter earnings season, and we do see earnings coming out a little weaker than anticipated. So I think that's something to certainly pay attention to. It really hasn't affected the equity market that much here of late. It really does not want to go down and wants to continue to really try and melt higher in what I would call a bit of a low volume type of market. We really haven't seen volumes move much above average. In fact, some days holding below average. So really nothing to make it sell off and really continuing to pressure up against these new highs. But certainly warranted caution as we move through the period here in these equity markets, particularly with the debt ceiling coming front and center. Again, watching these fourth quarter earnings are a little weak. How are executives guiding for the first quarter and full year 2013? And so far it's been a little anemic, as well as I think there's still some concern about what kind of political wrangling may come out of Washington, D.C. With the interest rate market, we really haven't seen the interest rates move that much. We're at 187 basis points on the 10-year. We're roughly around the 300 basis point mark on the 30-year. So the long end of the curve continues to fluctuate in a really tight range from a yield perspective, which, given the moves in the equity markets, one would expect those interest rates really to be a bit higher. But the Fed's still in there buying, and I think that's the big thing in the interest rate market we have to keep in mind. There's really a base both on the longer end of the curve from the 10 and the 30-year perspective that's keeping those prices well supported, keeping them from going lower and keeping yields from really going higher. So I think that's what we really have to pay attention to in the interest rate market, because once we get down to certain levels, we start to see buying come in. That's the Fed. That's also other traders who are anticipating that, and certainly just playing the broad range that's developed in interest rates. And I think that we'll continue to see in the interest rate market as we continue to bicker back and forth in Washington, D.C., but also continue to try and trade off of some of the macroeconomic data that continues to come out. Please give me a call at 888-596-5817 and we can discuss these opportunities and others. As always, remember, futures trading is not suitable for everyone and does carry a high degree of risk.